Welcome to the KOSEC Show. Join the KOSEC KODARI Securities team as they share their insights on the Australian share market, discussing some of their best performing companies, macroeconomic news from offshore, including local domestic news, foreign exchange, as well as commodities. If you have any questions regarding the share market, our phone lines are open. You can dial in on 1300 854 151 or alternatively, email info@kosec.com.au. Exclusively on this show, each guest will reveal their hottest stock pick. For more information on any of the topics discussed, go to kosec.com.au. The information featured in this program is general in nature and does not take into account your personal circumstances, needs, or objectives. Guests appearing on the program may own or have commercial arrangements with some of the companies mentioned. Before making any investment insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.
Good afternoon, investors. My name is Will Brownlee, and welcome to the KOSEC Show, where we discuss all things relevant in the market this week. Macroeconomic data, currencies and commodities, top performers for the week that was, and of course, our hottest stock picks for the week to come. As always, before I go any further, please allow me to introduce my resident experts on the market. To my left, the ever wonderful Caroline Wong. In the center, the ever stoic Gabriel Ryan. And of course, back from his brief hiatus, the ever mystic Mr. Louis Mossman. Gentlemen and ladies, how are we doing this week?
Very well, thank you.
Good. Welcome back. Welcome back. Everybody's all good. Had a good week so far.
Yeah, it was very good. I think we breached the 7,000 mark this week.
Yes, big round of applause for everyone that breathed the. We got the 7,000. I remember hitting the 6,000 mark. Do you know when we did the 6,000 for the first time?
Oh, was it? It's either 2018 or 2019.
I believe it was 2018, and it was the 6th of November, and I think it was about 11 o'clock. Do you know how I know that?
Geez, that's pretty accurate memory.
Because the Melbourne Cup, it was Melbourne Cup Day, and I was stuck in the office. So I remember distinctly that we breached that on that day. I think it was either that or it was 2019. It was one of those two. It might not have been the 6th, but it was around about that time, whatever the Melbourne Cup Day was. But we're having a great week. It's been absolutely fantastic. The market just going from strength to strength. Is there any stopping it? Is it going to continue to run from here?
Gabe?
Gabe?
No. It will never stop. Well, I mean, look, things are moving in a pretty positive direction. US and American, I mean, obviously, come on. US and Australian markets doing really well. I mean, our own market, we're pretty much at where we were before, a little bit below it. Everywhere else is way past it. So maybe we do have some further room to run, especially with all the volatility coming out of the market. So yeah, it looks like we're in for a good run potentially.
Because the way I look at it is I treat an index like a stock. Now, whether that's correct or incorrect, okay, I treat it like a stock. So I want to buy a stock that's undervalued. I'm not necessarily keen on buying a stock when it's on its all-time high, unless I think it's going to break out and break to new highs. So I'm looking for indices that aren't on their all-time highs, or if they are on their all-time highs, they're a bit lower than what the other indices around the world are doing. So Nikkei, I believe, is on an all-time high. I know New Zealand's on an all-time high. US, I think all three indices.
S&P, Dow, and NASDAQ are all just continually knocking out all-time highs.
And was it last night or the night before that they hit all three of them? I think it was last night, all simultaneously hit an all-time high.
I'm not sure if there was a trifecta, but this week there definitely was a trifecta. I'm not sure if it was on the day, but definitely they're all knocking out all-time highs for sure.
And Gabe, what do you think's causing this? Is this euphoria? Is it just what's going on? Are we back? Is it back? Is it back to the roaring 20s? Because it's been about 100 years, isn't it? It's about 100 years since the Great Gatsby and the big stimulus after the wars and everything, and then of course the crash of 1929. Yep. Are we going to go back to that? Is everything going to rally? Because gold was up last night, oil was up last night, US, FTSE, everything was up. Everything just continues to run.
Well, look, I mean, volatility is really low at the moment, so equity markets are pumping, risk on assets are going up, all the risk on currencies are up as well. So the Australian dollar, New Zealand dollar, for example. You got crude oil, which is pumping as well. Even gold, which is, a risk-off asset, is doing very well. So we're in a very good environment, it seems.
Yeah. Are you excited? I'm excited. You don't look that excited.
I'm always excited.
Let's
Maybe
go.
It's in the name, stoic.
Stoic is. I don't know what we would expect when we call a guy the ever stoic Gabe. I'm not sure if we're expecting a great deal of excitement out of it, but we are expecting some mysticism out of yourself, Louis. But for now, we're going to jump over to the ever wonderful Caroline Wong, who's going to give us a wonderful chat about AU unemployment, which has come out. It's a bit more local, a little bit more down to earth. We'll take the tone down a little bit. Where are we sitting with unemployment?
So Australia's unemployment fell again. The Treasurer actually said Australians, quote for quote, can be confident about the future.
Okay, so he think quote quote things can be confident.
Yeah.
I've heard things that we're not out of a recession, but I said we're back to pre-pandemic full unemployment or something like that. Or?
Not yet, which brings me to my next point. Let's go into the charts.
Okay.
We can see two charts here on the left-hand panel. We can see that the chart outlines the various recessions that we have been through in the last few decades. Specifically, the blue line highlights the one that we've been through most recently. But if you compare it against the x-axis, which highlights the duration, it shows that the current labour market is rebounding close to 5 times that of the recession we experienced in 1990. So we're rebounding at a faster rate, getting out of recession at a faster rate than we used to before. So that's on one point is good news. If we move on to the right-hand side panel, you can see that unemployment fell again to 0.2% to 5.6% in March 2021. And to answer your question, Will, back in March 2020, unemployment was at 5.2%. So we're almost there, not too far away.
So just let me get this 100% correct. Back in 2020, so it's pre-COVID.
March 2020, yeah.
Pre-COVID, we were at
5.2%.
And what are we now? Sorry,
5.6%.
So we're pretty close. We're getting
very
there.
close,
We're
yeah.
getting there.
If we look at the blue line, it's participation rate. So this highlights people who are employed or actively looking for work. This figure also ticked up to 66.3%.
That's very high. It looks very high.
Yeah, but all in all, if you combine the news and if you combine it with corporate news, Seek.com, the job portal, SEK, actually reported the most number of job listings in their 23-year history. So as opposed to last year, they actually recorded 75% more job listings.
Wow. So that's a big sign of things to come. Seems that people are quite keen to get back to work right now. All boats.
Qantas and Virgin actually said that they are looking to hire more, and they actually retained their employees during the pandemic. So it's a very good sign.
Wow, we've really, that's something quite incredible. We've really come out of this, we've done exceptionally well. Big pat on the back.
There's one note there that might be lost in the data sometimes is full-time employment versus casual employment. Casual employment is recovering at a faster rate, and full-time employment isn't really recovering as quickly. So
specifically for women, young women.
Yeah, so part-time employment for young women, 80% of the 70,000 jobs created in March went to women in general, and casual employment was a lot higher. So that's not always a great thing for the economy. Casual employment so high, as we know, it can lead to underemployment. So if you read between the lines, it's something to not be concerned about. But again, you got to.
So obviously that's kind of thing. Logically, we'd sit there and we'd think, okay, so we've got casual employment going up. Now that means that people are maybe told to work from home or not work from home. Sorry, be at home for 3 days a week and maybe come in for 2, which is not really what people are after. Yeah. Not because people don't. I'd love to work 2 days a week. That'd be brilliant. Actually, I think everyone in the office would know that I would go crazy if I could only work 2 days a week because I love my job. But if I did have to work 2 days a week, I would probably be very underemployed. I would feel the need to either earn more money or to go out and is that what you're talking about when you say underemployment?
Exactly right. And that trend pre-COVID-19 had been accelerating for pretty much the 10 years prior to now. Underemployment was rising and at quite a quick rate, and it's only been accelerated by COVID-19. If you think about it quite logically, employers want that flexibility when it comes to taking on new staff because COVID-19 proved that anything can be around the corner. So casual contracts and part-time contracts pose, a lot less, complications when it comes to hiring new employees. That's why that trend has only been accelerated.
Because if we think about it logically, there's probably more casual people out there. Gabe, or maybe you can feed into this. There's probably more casual people out there working as opposed to executives and people that are in offices. There's probably more people in bars and cafes and stuff simply because there's so much more of that. Would that be safe to assume? Or?
Well, it's an assumption. I haven't poured through all the economic data myself to give you an exact reading, but that certainly seems like it could be certainly the case.
Yeah, and that the acceleration of underemployment, as you mentioned there, those are the kind of the jobs that were lost during COVID-19. So they're the ones that are going to be first gained back. Full-time employees, you find the hardest to get rid of them Versus COVID at bars, restaurants, cafes,
Yes, of
they're
course.
casual employees. You can easily get rid of them because they're casuals, right?
Yeah, absolutely, absolutely. All right, so let's go over to Mr. Louis Mossman now, because you took a bit brief hiatus from the podcast or the show last week, okay? And I know that you were sitting at your desk and you were chomping at the bit to come and release this big thing that you found. You came up and you tapped me on the shoulder and said, "It's incredible how low we are on our inflation and our interest rates and everything." I know we're low. I know our interest rates are at record lows right now. What's an interest rate now? What's the RBA rate? 0.1 now. In a bank, maybe 2%, 1%, maybe.
Exactly right.
Very low. But how low is that? Because I know we've cut from 2% down to that, but how actual low is that in the general scheme of things?
Well, we'll have to take you back, Will, 5,000 years. I told you I'd say that.
We're taking back 5,000 years.
The whole premise about what the research that I was doing, and this is what I'm most interested in, economics in general. So I was looking back at just how low interest rates really are over history, right? And it turns out that they're actually extremely, extremely low. I found an amazing chart, and I'd love to pull that up right now for the viewers. Now, this chart does demonstrate interest rates over a 5,000-year period. So we've got bonds that going back, not on this chart, but there are bonds and debt and other interest rates going back 5,000 years. So the Mesopotamians were lending at 20% interest, right? So that obviously isn't too relevant to the investment landscape now, but it goes to show that
what were
interest
they lending?
rates,
So were they actually lending like gold coins?
whatever they're trading, interest can be made. You can have interest on cows if you think about it, logically,
right,
whatever they were trading. So it goes to show that interest rates and lending is not a new phenomenon. It's been around for essentially for the whole of modern civilization and ancient civilization. To the chart we've got up now, the first, the earliest dates we have, they're around the 1300s and 1600s. So we've got Dutch perpetual bonds from the 1350s paying 8% interest.
So perpetual means forever?
They pay them forever. There are still Dutch perpetual bonds paying 8% interest to this day. There's actually a gentleman who's still collecting his Dutch perpetual bonds, and that's been passed down to whoever the owner is.
So you can just pass them down and you can keep passing them down.
Or they can be bought, they can be sold, they can be passed down to family members or to like any other asset, and they're still paying 8% per annum.
And what's a perpetual bond yielding now?
Well, I believe if you're on that chart as well, there's not a lot of perpetual bonds really going around. They were mainly used during war times, around over the last 500 years.
Yeah, okay.
Not as much now. I believe the UK, their perpetual bond was kind of married in with their current cash rate. So over the last 250 years, the lowest that UK interest rates went were 2%. Now, we only broke that low a decade ago.
Okay.
World interest rates are quite literally at a low that have never been seen before in recorded history. Where it's very difficult to find a rate that we're currently lending at right now. If you think about it as well,
so the lowest was 2 years ago. We were at the lowest that we'd been in a very long time, or 2%. Is that how low was that? Was that very, very low as well?
Well, sorry, the 2% was in 1897.
Okay.
By the English.
Okay.
And now we only broke that low in recent times.
So we were because we went up. How high did we get?
Oh, I mean, there's interest rates that exceed 100% in some extraordinary circumstances.
Yep.
But I believe on that chart as well, they range from 2 to 30, 40%. And that's based on a range of indicators over time, right? Now, I take you to another phenomenon, money supply, which is obviously printing money and banknotes that we have and cash that we have today. The first evidence that real paper cash was ever used was about 1,000 years ago.
Yes.
Again, it's not a new phenomenon, cash, and neither is printing cash, increasing the money supply. That's been happening across the world for 1,000 years. The Song dynasty in China, I know this sounds a bit cheesy, but they were the first economy to really discover the power of printing cash.
Wow. Okay.
And the economic, boom that they experienced from printing it. However, much like we've seen over the last 1,000 years, inflation skyrocketed. War times came around. Extreme inflation knocked out their economy and destroyed. So the increase in the money supply, the eventual inflation, and an economic collapse ensued. So that takes me to today where we think we're hearing all these things. Interest rates are at record lows, where they really are. But interest rates, the money supply, and monetary policy is not new, and it's not new to economics as we see it. So I like to think of it really as a scale of 0 to 100. So how bad and how just crazy is the environment we're in right now.
Right.
So 0 is not that crazy and we'll keep chugging on forever very happily, and 100 is this is the end of the world.
That's
and
crazy, completely crazy.
Yeah.
And where would you plot us?
I'd put us a little bit closer to 100 rather than 50. But that is so unpredictable, really, to know at this point. Now, I say that because the environment we're in, though the relationships have been used for 1,000 years, the environment we're in has actually never been seen before. So it's very difficult to forecast exactly what's going to happen. At some point, interest rates will rise. And at that time, the contraction of credit to the financial system, it will wreak havoc. But we just don't know when that's going to be. You've got three parties that really want to keep interest rates low. You've got the RBA, you've got the government, and you've also got regulators. The RBA is under extreme pressure to keep the financial system tugging on. They don't want to increase interest rates. Every statement by Mr. Lowy of Australia and the Federal Reserve Chairman, Mr. Powell, is watched very closely. Yes. They don't want to raise interest rates. The governments want to, they want to make sure it's low as well, They want to stimulate economic growth. But thirdly, the regulators are the ones we'll have to watch out for, because at some time they're going to have to cut back the level of lending we're seeing at the moment to consumers. And that's what's really going to knock out the economy, but we just don't know when that's going to happen. So a little bit of a history lesson going back a long time, I know, but I just wanted to illustrate the point that money supply and the relationships we see today are nothing new to our economy, and history does teach us some very valuable lessons as well.
Well, thank you very much for that, Mr. Mossman. I hope we all learned something. Ladies and gentlemen, we're going to take a short break. But if you have any questions for our panel, or if you have any questions for Mr. Mossman about inflation, make sure they're tricky ones. Please take a video, email it through to info@kosec.com.au. Anyone who does will receive a copy of our book, Stock Market Success, retailing in Dymocks for $39.95. Or our magazine, selling in news agencies Australia-wide for $19.95. We're going to be back shortly with your currency and commodity overview.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age, and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Do you follow currencies? Want to know how the Aussie dollar is travelling? Do you love commodities? Do you see gold prices rising? Do you see more demand for oil? Do you see the world economy growing? Get the latest in-depth analysis and discussion on commodities every week from real traders. Get real insights only on the KOSEC Show.
Welcome back. Let's talk about currencies and commodities, all things that shine, sparkle, fold, and make the world go round. We're going to start off by going straight over to Mr. Ryan, and we're going to talk a little bit about oil. Normally we start with gold, but today we thought we'd mix it up, keep you on your toes. Let's start things off with a bit of oil news. We're up quite a bit.
Yes,
5% early in the week. Yep.
So I guess, I mean, in terms of news, the EIA did recently upgrade their demand forecast moving forward. So that's probably had a bit of an effect. What I think is really affecting what oil is doing at the moment is what a risk-on appetite that we're seeing globally. So if you have a look at what the US dollar index is doing, if we have that chart, you can see that it's hit a bit of a peak and it looks to be coming down a little bit. Now, inflation expectations are sort of on the horizon. Gold's doing very well at the moment. Lou will touch on that. So we have this environment now where equities are doing very well globally. Crude oil is a risk-on asset, so naturally that's something which could also do very well. If you have the chart of crude oil there as well, I know that's a line chart, but it has broken a shorter-term downtrend. Again, the whole Ever Given ship fiasco did sort of hold at a certain level for some time, and now we could see some further movements happening. The only risk I see for oil at the moment is a potential for any I suppose, disruptions with the COVID vaccine rollout. You know, we had the concerns with AstraZeneca. I think Denmark's banned the Johnson & Johnson vaccine for some time. So that could be negatively weighing on oil moving forward. At the moment, though, it looks pretty good.
To be fair with you, though, there is a lot of risks that could come out from it. First and foremost, developing new strains.
Yes.
Second and foremost, needing to get the jab every year.
Yep.
Thirdly, is it going to work? Is it not going to work? Fourthly, blood clots. There is a lot of issues out there that it's not, you know, could stand in the way of that.
Yep.
And the thing that I'm really struggling to get my head around is they're saying oil is going up because the demand forecast for oil is going up, but they're anticipating it's almost like they're anticipating that the demand's now or next week.
Yeah.
But we're not going to get all of, and I'm only using Australia as an example, but they're saying a lot of people not going out till October this year. And remember, you need, was it 3 months between the doses, or at least 6 weeks between the doses?
Yep.
So I'll get it, and let's just say I can get it in December. I'm not going to be traveling on a plane until March next year, if that makes any sense. Does anyone else find that a little bit strange?
I find what I find strange is all the dates and times that they give out. Like Qantas think global travel is going to be open in October. The Australian government says vaccines will be rolled out then. But no one really knows, to be honest.
And then some people say 2024, we'll still be struggling with it. And
I mean, it's all just news trying to get your attention and spit out an article. You can't really understand or know anything. You've got to just deal with the fundamentals that you've got right now. In oil's case, you've got to deal with the fundamentals. Yeah, there's might be a little bit of speculation in oil, but the demand for the literal asset that has a real use case is what's going to drive the price at the end of the day. And again, as you mentioned, it's got a lot of disruption potential. So you've got OPEC, which is
Yeah,
output,
yeah,
and then you've
absolutely.
got demand side, which is the European Union and their poor vaccination rollout. And as well, I suppose, as Gabe mentioned, any other vaccine disturbances when it comes to their efficacy and
course,
application.
of
So
course, yeah.
it's all demand side for all.
Yeah, brilliant, brilliant. Well, let's talk about something that's got nothing really to do with it. And I suppose it is to do with the stock, but it's also more to do with the currency, and it's, of course, cryptocurrency. Earlier this week, the big news was that Coinbase came out. Coinbase came out with, with a listing. Coinbase, for those of you who don't know, it's listed on the NASDAQ now, and it is a cryptocurrency trading platform where you can go buy and sell cryptos. So it's a stock, but of course it is the actual platform behind it. Big debut. Big debut. Listed at
328.
Listed at 328? I thought, okay. And got up to above 400, I think, and then came back down or something along those lines. So it had a very, very choppy, volatile side. What does this mean for cryptocurrency, Gabe?
Well, it's just going to be the narrative of broader mainstream adoption of cryptos, I think. So Coinbase is, I think it's the first exchange to go public.
Yep.
That's over in the US. There are other offerings in terms of the broader market. In Europe, you have Kraken, for example, in China-based Binance.
Yep.
A lot of liquidity goes into those two exchanges in volume. So, everyone's talking about cryptos at the stage. It's a bit of a get-rich-quick sort of situation for a lot of people. So, a bit of FOMO maybe with something like Coinbase. I mean, it's going to do really well, provided that, Bitcoin and the broader crypto market's going to do very well as their earnings are essentially the fees, right?
Well, it's interesting because they charge 1% brokerage.
I'm not too sure what the fee is. I do know it's considerably more.
CoinSpot here is 1%.
Yes.
Fee. Now, you think about that. If you're buying $100,000 worth of Bitcoin, you're not even getting an advice on it. No, nothing in there. You're paying a good whack. You're paying a good whack of money over to them. You multiply that by, I think, got 64 million users. They're all putting big money through the market.
Yep.
And they don't have to do anything. They don't have to give advice. I mean, it's the equivalent. I mean, we always talk about these discount broker platforms like Self-Wealth and KOSEC, etc., where they don't give any advice and they do very, very, very low fees. So imagine that same frequency, that same adoption, but the fees are 1%. I mean, to be fair with you, it's a very smart business idea.
I think, but why people and consumers aren't too worried about that 1% is the volatility you see in cryptos.
Of course, yeah.
A 1% when you turn on your phone the next minute and it's up 15%.
Yeah.
It's like, oh well, I'll
Or
pay the
down.
1%. Or down as well.
Or
So
down.
the volatility is where people go, the 1% doesn't matter. And as you said, FOMO. People will probably sign up for an account, put in some money, buy, and not really think about the fees even at all.
Yeah, of course.
They're just about making that 300% return that their friend told them about. And that's what's driving the crypto market and CoinSpot IPO.
300% return in a day,
Yeah,
or whatever it is. Let's go over to something that's a little bit more tangible because I listen to all the news on the channels at work all the time, and obviously when I'm working with clients, we've always got it in the background. And a lot of the CNBC presenters, they get a lot of people on that are quite bullish on Bitcoin, and you get some CNBC presenters which just hate it, and they just hate even talking about it. But I will quote one of them now, and he says he wants to talk about something tangible. So I want to talk about something tangible now, and I'm going to go over to iron ore, and I'm going to have a quick chat with the wonderful Caroline Wong. You heard your iron ore for a while, and I understand it's doing quite well. Is it now on a high?
Yes, so if you look at a line chart that we have up there, it's up on a nice little rally. As of this morning, was up 2.8%, hitting $178, so almost touching $180. However,
Is that an all-time high?
Almost.
Almost an all-time high.
But not all iron ore miners have reacted in the same fashion this week. So Rio was up 3%, but Fortescue was actually down a little bit this week.
Yes, right.
In terms of the developments that have occurred this week, so China imports of Australian iron ore actually rose 19% in March. So that comes up to about 102 million tons in March. Regarding the recent developments, which includes the pollution concerns in China, so this could mean two things for iron ore. First, it could mean steep discounts for low-grade iron ore miners. Otherwise, that would mean higher demand for high-grade iron ore miners, which in that case will benefit Australian iron ore miners. But nevertheless, the longer-term outlook is slightly bearish. Goldman Sachs believes that the price will fall to $110 per ton in the fourth quarter.
They say copper's the new oil, isn't it?
Yeah.
They say copper's the new oil. Copper's very, 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 very high in its range now, 9,000 something US a ton or something along those lines. Obviously, very good for the economy because a lot of people say the copper is a bellwether to what the economy is doing because it's used in so much production of electronics, etc., etc. But it's getting very, 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 very high. We could be looking at a $10,000 mark at some point soon. So iron ore, almost on an all-time high.
Yep.
Copper, almost on an all-time high. Oil, got a ways to go. Gold, got a ways to go. That's a bit of a mix. It's a bit of a game of two halves.
Yeah, well, I think we've been following that commodity super cycle now for the last 4 or 5 months. We have seen that incredible run up, but every single commodity that you just mentioned has all pretty much, not exactly, but shown the same kind of consolidation patterns at these highs. So they're not really looking to burst through any further at the moment. So I suppose we're just waiting and watching to see what happens in that space. But again, as you said, the applications of them do bode well continually moving forward.
Very good. So that's commodities and currencies and the events that have shaped them. Now, are you a bull or a bear? Let us know. Our phone lines are now open. In the meantime, we're going to take a quick break, and when we get back, we're going to be taking a look at what the best and worst performers on the Australian market were this week.
The world changed this year. So did the stock market. Is it time for a change in your portfolio? Invest with confidence. Invest with a solid strategy. Invest with KOSEC, KODARI Securities.
RBA has cut interest rates to a record low of 0.1%. Returns in saving accounts are now shockingly low. We have never seen these conditions before. The good news is that the stock market benefits from low interest rates and historically has outperformed property or any other asset class. KOSEC uses a unique stock market filtering system called Lotus Blue, which helps generate solid profits for clients. During COVID in April 2020, KOSEC recommended Kogan, which went up 340%. In June, KOSEC recommended Saracen Minerals, which went up 23%. In October, KOSEC recommended Nickel Mines, which went up 33%. If you want your money working overtime, you need to know what stocks to buy and when to sell. That's where KOSEC can help. With no barriers to entry, it's just simple investing. Build wealth with a concrete investment strategy. Go to kosec.com.au. Get a free 7-day access to Lotus Blue and receive our top 8 stock picks today.
Throughout time, humans have relied upon innovation to advance and evolve, using new and improved methods, having meaningful impact on society and industries. In order to advance, ideas were transformed into new products and services. The stock market has also evolved through innovation. Innovation has been key to KOSEC's success. Using artificial intelligence and machine learning, KOSEC has streamlined processes to bring better opportunities to clients. Opportunities that might have otherwise been missed. Join a company that innovates to bring clients the best opportunities and service. Invest with a solid strategy. Invest with confidence. Invest with KOSEC. KODARI Securities.
Welcome back. Let's move on to our next section now and have a look what the best and worst performers of the week were. And as always, we're going to go straight over to the ever wonderful Caroline Wong. You've got your lovely chart for us. Tell us a little bit about what's happened this week.
So for the XKO as a whole, so that's the S&P ASX 300, we're up close to 1% this week, hovering around 7,050 points. So that's very good, less than 2% away from our pre-pandemic highs.
Wow, yay.
If we jump straight into the chart, we can see the top performing sector this week was IT, up 3.85%. So in particularly Zipco, ticker code SEC1P, was up 12%. A lot of it's announcement based, so third quarter results were exceptionally strong.
Yes.
Quarterly revenue up 80% year on year, 214 million. Altium, this is one that we are in, was close up to 9% this week. So it's
the
a
printed circuit boards. The printed circuit boards, that's one that we've done very well out of,
And the other sector that has done relatively well was materials, up 1.11%. So IGO Limited, also one that we were in previously, was up 7% this week. It has also said that we'll be selling off its 30% ownership in Tropicana Gold Mine. And obviously investors have perceived it well, so that they can then focus on more other industries such as clean energy.
Oh, very good. Clean energy. I think someone's going to talk about clean energy a little bit later.
Yeah, well, I think the materials as well, driven definitely by those gold producers.
Yeah.
Three in particular, Evolution, Northern Star and Newcrest. We've done very well out of Northern Star as well. We were mentioning it on the podcast 3 or 4 weeks ago, and since then,
and Altium as well. Altium as well has done very well. So it's great that we've been mentioning that. Good work, guys.
Yeah, of course. And I think Northern Star since that low is up, 20-something%. And in the meantime, gold really hasn't done the same thing. So people are picking up a lot of those businesses on the discount. Altium, Appen, and Newcrest, Northern Star, like we've mentioned on the podcast, and they have
A2 Milk's done very well. I know that's something that we've been mentioning quite a lot last week as well. So these shows, buying this right down, heavily beaten down, movement back towards the north seems to be very, very good.
Yeah, of course.
And in this commodities and materials space, is that right?
Yeah. Oh, in general, just those gold producers have done exceedingly well, and they're obviously some of the largest producers in Australia as well as the world. So that have been definitely lifting the materials index at the moment. That could have been driven a little bit by, and so has the rebound in gold prices, as Gabe mentioned, be driven by a little bit of inflation data coming out in the US. Over the last few months, we have had significant, a little bit ticks up consistently in inflation, but nothing that's really scared the market as of yet, but definitely something to keep an eye out for. Gabe does keep a close eye on a gentleman, a financial commentator by the name of Peter Schiff. He has a lot of. He's
very funny.
He's very funny. He loves gold and he hates Bitcoin.
Yeah, he loves. He comments so much.
Yeah, he loves his Twitter, but he does have some really good insights on when it comes to the data that he puts out on inflation, and he does believe that inflation is so inevitable.
Yes,
and gold will be the beneficiary of that.
He's been bullish on gold for a while.
Yeah, of course, and gold has made that kind of double bottom in its price, has ticked higher in recent days, and the gold producers and the market have definitely enjoyed that as well.
Very good. Very good. Ladies and gentlemen, back by popular demand, let's go to our next section of the show. We're going to take it to the street. We're going to see what the other people are saying out there in the real world. This is Street Walks, Street Talks.
Welcome to Street Walk, Street Talk. I'm in our beautiful city of Sydney, asking people about the market. What sector or what businesses would you put that $1 million into?
Probably natural resources.
Yeah,
I think.
natural resources.
Yeah.
Are you interested in renewables or just?
Yeah, renewables. I mean, that's a growth industry, isn't it? So yeah, I think there's always going to be demand for natural resources, but renewables is really picking up too. So I consider both.
I think it's a good time to invest now because the U.S. market is keep going up, so as Australia market as well.
Okay.
So, but I don't know which particular stock, but I think it's good. International stock like Qantas, like traveling stock is good to investment. Yeah. I think
Traveling stock.
yeah, traveling is good. Because still it's been locked down for a long time, so people wants to go traveling. I think traveling is good, is booming.
So you want to buy the dip and then wait for everything to open up and just ride it all the way
I don't know, is it a dip or not? Is it down the bottom or not? But it's a good time to pull it on at the moment. Yeah.
All right.
Thank you.
Cheers. Thank you so much.
Yes, we've got a couple of investment properties,
Yeah.
but we live in the bush,
Okay.
6 hours from here. So
Oh, really? Okay.
In the middle of New South Wales. So yeah, we don't. Oh, we've got a few stocks in the ones you got off the government, all that sort of cable.
Right. I've gone around to a lot of different people today, and they have been talking about property. Do you think that the property market might be overheated?
Well, I reckon it's hot here anyway.
Yeah.
Not so hot out here where we live, but you know, that's the way to be here.
Yeah.
I'd hate to be trying to buy in here. We could sell our 3 houses
Right.
and not be able to buy a house in Sydney.
What sort of sectors are you looking to at the moment?
That's mostly computer.
Computer, so tech.
Yeah,
Tech players. Right. And why is that? Is that just because you like it, or is that what's recommended, or
What I read about it in the paper.
you read about it and so you're pretty keen on it? Great. And if you had $1 million, would you put it all into tech?
I give it to my kids.
Yeah.
I
Okay.
give it to my children. Yeah.
Invest in the future. Coinbase actually listed yesterday. What do you think about that?
I think currently I'm just looking at the graphs. I'm finding out the insights and what exactly it looks like in future, or probably just now. Then only I'll be investing. Just in the morning while I was coming from the train, I looked at the Dogecoin.
Okay, yeah.
And it looks like it was from 0.17, it boomed up to 0.22, and feels like, oh yeah, I've earned someone. So probably I'll be investing more on that, as Elon Musk also tweeted on it.
Would you trade that, or just put more and more into it?
I think it's just like Theta coin. I'll be probably doing it more and more, investing on it. Not as in like straight away fully into it, but probably in a partial. For example, if I'm doing $10 today, I'll be probably doing tomorrow $20. Keep going that way.
So that was Street Walk, Street Talks. I absolutely love that show. I think it's an actual brilliant part, and I'd love to hear what everyone else is thinking about it. Let's unpack a little bit about what we talked about today. So I think the first gentleman was talking about property, something we spoke at length on the show last week. Property, obviously, I was sort of talking about it. It's like, is property an asset? Is it a liability if you've got a mortgage? You and I were Googling just before, Gabe, in the break, and we were actually looking up some houses that you could get, because you said to me, if you go out to the country, because this gentleman was talking about out in the country, and I think he said he could sell 3 of his houses out in the country and he couldn't buy a house in Sydney for that amount. And you said you can get a house. You actually said you can get a mansion, but I'm assuming that means you can get a house. You can get a house for $40,000 out in the country. Yeah. I'm a very quick person to lay bets, so I said I will bet you a chocolate fish that you will not find it. So you found one. You found one, didn't you?
I found a few. I mean, yeah, they're in very interesting locations.
You found one in an island in. Didn't you find one in an island in Queensland? It's $32,000 for a studio apartment.
An island near Townsville. I forgot what it was called, but it was $32,000 for a 1-bedroom, 1-bathroom apartment. Also, I found one for $25,000 in Whoop Whoop, but that was obviously a very old property.
That's
I think we should stay away from these guys.
Yeah.
I'm pretty happy here.
Yeah, I'm pretty happy. And I mean, that's the thing though, isn't it? It's like, But with this whole expansion of the population growth and this whole work from home sort of thing, would it be wise to start looking further abroad? Is that going to be the next big thing? People are just going to stop buying in the city and start buying outside.
I don't know. It definitely has accelerated it. I've got family members that live down on the south coast in Kiama, and they're experiencing a lot of high demand for property down there as well. I mean, it's only an hour outside of Sydney, and as well, it's a nice, viable area to live. So I think COVID-19, working from home, might have made it an option for different people, but people want to live in cities, in the Sydney. That's where the jobs, where the opportunities
exactly
are.
right.
So it's probably going to remain that way. I think we know property's pretty damn heated right now. It's been in the news a lot. RBA's had a lot to say on it as well. I believe in the United States, I can't remember the exact percentage, but something like 1,000, 4,000%, something like that, of when is the property market going to crash.
Yeah.
That search on Google has gone up 4,000%.
It's really weird when we talk about buying in Sydney, because obviously I'm I live in Australia. I wouldn't dream of living anywhere else but Sydney, just simply because I want to be good at my job and I want to be involved keep my ear to the ground and keep fingers on the pulse, etc. And this is the financial hub. We do a lot of work with KOSEC, does a lot of work with CEOs and stuff, and you find a lot of them have got offices here in the city. So for us, I've never really thought about ever going out. But this gentleman was very keen. He was like, "Oh, I live in the country. I think I'd love to have a chat with him about what he was doing in Sydney today," because it didn't look like he was having the best of time. And I just love to know what he was doing down here. Let's move on to our next gentleman here who spoke about natural resources and renewables. Now, Caroline, you've got some pretty interesting stuff about that as well. Care to enlighten us?
Sure. I think the most prominent renewable player that we're talking about right now is called Tilt Renewables, ticker code TLT. So it's dual listed both in Australia and New Zealand. However, over the last year, it has risen by more than 100%.
Wow.
Currently at $7. But it does not fit our investment criteria, so it's not something that we look at. Alternatively, if our viewers are keen into getting into a player that's not so heated right now, and also fits our investment criteria, that's APA Group, ticker code APA.
Okay, yep.
This one is not too heated, and there's still 18% before it reaches its high, so that's quite good. But they're both players are operating in the same sector. So
very good. Well, there you go. There's renewables. What about the next question? The US market's looking very good. Aussie market's looking very good. And talking about travel stocks. Picking up, and our lovely producer, Mr. Timothy Geldar, was talking quite a bit about buying the dip. And he said, no, it's not the dip. It's at the bottom, which I was a little bit confused on. But I kind of get where he's coming from. Is it time to jump into travel stocks?
I mean, I think for the last 3 or 4 months, it's always been a little bit of a bet on stocks. As I said before in the last segment, everyone who makes those predictions when international travel is going to rebound doesn't really know. It's such an unpredictable environment. They are leaving a lot of it up to chance. I do think great businesses with great reputations that are very strong, backed by the government, such as Qantas, they'll always be around and they'll always do reasonably well. Whether you're going to see the growth that you're going to see in other sectors from this point forward is pretty uncertain. That's what I'd say.
But just adding on to your point, as of Alan Joyce just came out to speak on Wednesday. So apart from the recent COVID-19 vaccines that we've been talking about, the progress, he has not yet to change his timeline for international travel. He still sticks it at October.
I think the point is really that international travel will resume.
Yeah, so you're
Bottom
buying
line.
into something that's almost a guarantee. It's
Bottom line is that the earnings of all these airlines will go up.
Recover at some point.
That's what's going to happen. Who knows when? It is going to happen, though.
But is that priced in?
Who knows? I mean, maybe it is, maybe it isn't. I think if you look at where they were trading at before versus where they're trading at now, I think a lot of structural changes are probably, coming in for a lot of these airlines. I know Qantas, we've got that fleet that's been retired. I mean, really, it's just going to be the degree to which people want to go overseas.
If you had to invest, if I gave you 100K and I said you have to go into a travel related stock or a tourism related stock, what would you go into? Why?
Just do with what I know, probably just Qantas.
Yeah, Qantas, just the airline.
Yeah, I'd probably do the same as well. I mean, there's a lot of different companies you could look at, but when as I said before, you're looking at a great company with a good reputation, backed by the government, they'll always be around as Australia's leading airline. And when international travel resumes, they'll be the beneficiary.
Is there an argument to be made, and I'll play devil's advocate, is there an argument to be made that maybe something like AIZ, which is the Auckland Airport, or Sydney Airport, is there an argument to be made that those ones could be slightly lower risk, or would you disagree? Or is it Qantas? You still...
They're not really stocks that we look at too closely when it comes to the airports themselves. I mean, they'll definitely benefit when there's consumers and travelers moving through their domains. But again, it's really difficult to tell what's priced in. And all those travel stocks, they will rebound. But as Gabe said, the extent to which is what is really up in the air to investors. And again, no one really knows and no one can predict that.
Absolutely. Tech stocks. We also mentioned that. I think a gentleman was talking about tech stocks. He thinks that's the way to be. Is tech, certainly overseas tech's not doing, is doing well. It's on very close. We are still sort of starting to recover. Bullish on tech, Caroline, bullish on tech?
Bullish on tech. We've done very well out of tech stocks.
Recently, last 2 days. Appen, Altium, Data 3, 4% today. Did very, very, very well. Something that's looking quite attractive. WiseTech Global, the logistical servicing one, that's actually rebounded a lot. That did not get beaten down as much. So a lot of these tech stories, I think there could be areas to pick up some value. Certainly Appen. I think Appen is one of those ones that could really catapult back up again.
Yeah, I brought that a while ago on the podcast, and I'd be happy to mention it again today. It's a great business to buy and hold for a very long time and do very well out of. In the short term, it could fluctuate. But again, we've got to find the right tech companies. I think we're very bullish on tech, but again, the right tech.
Absolutely.
Tech like Afterpay, again, it's still very high.
Zip. I spoke to a client, spoke to someone today, and he was talking about tech, and he was saying, what do you think on Zip? Yeah, look, great. It's going up, brilliant. I love stuff that goes up. Same as anyone. I like stuff but the company still doesn't have very good financials. Like a person like Warren Buffett would look at that and say, well, it doesn't make any money yet, and it's under a lot of debt, and it's increasing its debt. Fundamentally, it just doesn't seem sound. I think that's probably one of the problems that we've got with those tech players. Probably if you're going to go into that fintech space, EML, which is something that we've been in, I think, quite a bit. We might have sold out recently because it was on an all-time high, but that was something that did very well. Is that right, team?
Yeah, no, exactly. Those tech players that have a great business model and a product that's useful today and they're profitable today, and they'll continue to be so in the future, the ones you want to find, not the ones that Afterpay and Zip where there's no tangible fundamentals behind them at the moment.
Exactly right. The final question was on Dogecoin.
I think we have to go to the crypto
expert. I think we have to go to crypto. I think we have to go to crypto Gabe there. Have a chat about Dogecoin.
Dogecoin. I mean, I did some looking into this, and I came across some forums on the internet, and there was a really highly rated post, and the guy literally said Dogecoin is worth what we want it to be worth. Right, so
is that off Reddit? Surely that's off Reddit.
That was off Reddit. I mean, if you think about what Dogecoin is, the actual creator of the currency said it was a meme, it was a joke. But that's the whole point, right? That's why all these people are funneling money into it. It's the same people that are doing all the GameStop short squeezing and stuff like that. They said, well, Elon Musk did a funny tweet a little while ago, let's just start throwing money in. And I think it was a few months ago, it jumped like 1,000% overnight.
And
something crazy like that.
And then it never made it back. It's just tanked it the next day.
But now it has actually come above that point. So I mean, if people want to throw money into it, I mean, who knows how high it can go? If everyone puts all their money into it, I mean, this could be worth as much as Bitcoin will.
If you look at the chart of Dogecoin,
anything's possible.
Yeah, if you look at the chart of Dogecoin, you got to remember that there was someone who bought it at
that very top,
1,000% high. I pray for that.
Someone bought Afterpay Touch at $160
exactly.
or something like that. But Dogecoin's amazing. Like someone bought it at that price. And, what is it now? So
I don't keep an eye on it.
It's about like 25 cents US.
And what was the high?
That is the high now.
Oh, that's the high now.
So it has recovered it back. So maybe
this guy.
Maybe 30 cents.
I think that the promise of cryptos is still so being pumped again by CNBC. They just don't stop with that, and especially in all the major news publications, it's really what grabs people's attention. Coinbase IPO, Bitcoin making all-time highs. People are still happy to put their Biden stimulus checks.
We always talk about it. It's all about risk and reward with us. I mean, hey, it's a risky asset that could potentially go up. We get clients that come to us and that we always talk about it. We always talk about what it is and make sure that we're marrying very sensible stocks with the portfolio. If you want to go into it, that's fine, but we want to make sure that you've got lower risk investments there as well, potentially more stable ones. So that was Street Walks and Street Talks. And that is the best and the worst of the ASX this week. Now, do you have a stock that you've been watching for a while? Is it time to buy, sell, or maybe even average in? Why not send us a message and we can ask our panel in the meantime? Let's take a short break and we'll be back with the final section of the show.
How do you get the highest returns in the stock market on a consistent basis? Obsessed with this idea, Michael KODARI forms KOSEC, KODARI Securities. He seeks, in his own words, a revolutionary investment strategy based on better information and knowledge. Wealth begins with better knowledge, becomes his motto. He seeks to identify and accurately pick the next top-performing stocks on the ASX. He seeks for consistency. Michael KODARI creates a unique stock market filtering system he names Lotus Blue, named after a flower that blooms just once. Because in investing, timing is everything. See how accurate KOSEC stock picks are. Get a free 7-day access to Lotus Blue today. If you want the KOSEC investment edge, you know what you have to do. Call KOSEC now or visit kosec.com.au and take advantage of the insights he reserves for his clients.
Trust is key to any relationship. Fortunately, it's nothing that can be bought. It's earned. As an investor working with an organisation, they need to demonstrate integrity. They must show consistency, full transparency, accountability. They must be genuine in their approach. Their core values must align with yours. They need to put your interest first. If you are considering investing, work with an organisation that earns and nurtures trust. Work with an organisation you believe in. Work with an organisation that treats you the same way they like to be treated. Join an organisation that views clients as people, not people as clients. If you are considering investing, consider KOSEC KODARI Securities.
As kids, we were active. We were creative. We questioned all things. We celebrated everything. We took risks. We We had no limits. We had dreams. Our imagination helped us solve problems and create new possibilities. Albert Einstein once said, "Imagination is everything. It is the preview of life's coming attractions." We are in an ever-changing world filled with fear and uncertainty. Don't let that change the inner child within. As Walt Disney said, imagination has no age and dreams are forever. KOSEC is here to help build your dreams and create possibilities. Secure your success with KOSEC KODARI Securities.
Welcome back, the moment we've all been waiting for, the final section of the KOSEC Show. So this is what investors are really looking for. We know what oil, gold, and the dollar's done this week. We know what the top performers for the week were. Now let's take a look at what our panel is looking at for the week to come. And we're going to start off with our good friend, Mr. Mystic Louis Mossman. What are you looking at for this week, and why do you like it right now?
A bit of an interesting one. I don't think we've heard about this one on the podcast. A bit more of a defensive stock, actually. It's called Computershare. And ticker code is CPU. Now, they're an Australian share registry company. They do deal with SRN codes. They do a lot of the administration things when it comes to companies listing and their stocks. They also offer employee share purchase plans, and as I said, a lot of other administrative services. Recently, they actually acquired another company of a similar nature, Wells Fargo's division, share registry division, in the United States, and they raised $500 million to do so, and the market did quite like that. Recently, if we look at their financials, again, like all the businesses we bring, very fundamentally solid with all metrics. I think sales, cash flows, revenues, and operating margins, all consistent and increasing. And maybe COVID-19 has impacted their most recent year, but that, of course, that's expected. And I think the main thing to look at is the increased interest in the market and the increased activity that we're seeing new investors joining is obviously going to benefit someone like Computershare.
Yeah, because surely this is very logical. The market's going up because people are buying shares. Those shares all need administrative, or they need to be stored somewhere, and all the records need to be stored. Does that mean Computershare is just going to be more valuable and used more?
I think raising capital and listing, as well as employee share purchase plans, are the biggest contributor.
IPOs as well.
So that would be. Computershare would definitely be a beneficiary of that. Now, a lot of major institutions like it as well. They've got Morgan Stanley have a overweight rating with 10% upside. Morgans and Macquarie have add and outperform with 11 and 37% upside respectively. If we go to a chart on Computershare, we have seen that it's recovered considerably from COVID-19. It's slowly ticking upwards in a broad upward channel. It is looking to break out of that upward channel past previous highs, and it's still got 20% to go to its pre-pandemic level. Again, it's a bit more of a defensive stock. It's not an afterpay or maybe a beaten down stock like Altim, but it's still a very good company that doesn't look like it'll be impacted.
Even though that looks like it's on its all-time high, it's actually not. It's quite a ways off its all-time high.
Okay, maybe the chart we have is a bit zoomed in, but yeah, still 20% to go since it's pre-pandemic.
It looks like it might be 1 year, but there's still got more time pre-pandemic.
Exactly.
Brilliant. Computershare, I like it. Shares and computers, two of my most favourite things. Mr. Ryan, what are we looking at? Why do you like it? That's actually not true. I get very frustrated with both computers and shares. I don't like computers when they don't work, which I've always got problems with, and I don't like shares when they go down. So, okay. Maybe I don't like those two.
It's not therapy, we'll let Gabe speak.
It's not therapy, we'll let Gabe speak. Very good. Gabe, what are we looking at?
Well, you mentioned stocks going down. Pull up the chart of Appen, have a look at this. One we've brought on the podcast many times in the past. Solid company, amazing offering, technology, language, services, solutions, things like that. Work with Alphabet. Was very famous for saying that. Now, buy low, sell high. This is a quality company, so heavily beaten down. I mean, I think it closed around the $17 mark today. Its all-time high was closer to $45. We're looking at something here which is so low down in its range, multi-year lows, and fundamentally, although we have seen the material impact due to the pandemic, moving forward, especially with expectations for economic growth going up, we're seeing copper doing very well. What does that mean? The economy is going to do well. Inflation is going to go up. Potentially, of course. We're seeing an environment now where things are really moving in a positive direction. Tech over in the US is going gangbusters, and yet here we're being hit with a rather unfortunate situation. I think that's an opportunity to get into companies like Appen, which are so low on their range, you can buy it at a quality price and ride this all the
Gabe,
way.
you're sounding passionate. You're sounding excited about this. Ladies and gentlemen, you know when you're getting the ever stoic Gabriel Ryan sounding passionate and enthusiastic about a stock, you know it might be time to buy.
I mean, look, I would be accumulating it at these levels. It's really low. It's near the March lows from last year. Yep. I think it's a really good time.
Yeah, lower risk. It's got a bit more upside. Obviously, there's no guarantees. Anything can happen. It could go lower.
Of course.
Could go lower.
All
We don't know.
advice.
But the whole idea is that we're trying to stimulate thoughts and theories about things that could go well. All right, so I think that's pretty much everything for us today. Is there any one of Oh, Caroline, I didn't even see you there. Caroline, why don't you top us all off? What have we got? What are we looking at this week?
Yeah, so it's a new opportunity, hasn't been brought to the table before as well. It's called Net Wealth Limited, ticker code NWL. ASX 300 company, it's a fintech player. Its primary products includes superannuation, managed accounts, as well as self-managed super funds. But more importantly, NetWealth has a digital platform, so it allows financial intermediaries and clients to trade, manage, and invest in global and local products.
Ah, very good. Very, very good. So with more superannuations being brought onto the market, then they could be using that. Obviously, everyone's quite keen to set up their own self-managed superannuation fund, their own sort of funds, etc. Would that be something that could benefit from it?
Correct. So macroeconomically speaking, net wealth stands to benefit because interest rates are so low and people want their money to work harder for them, especially for retirees who are seeking a more reliable source of income. Financially speaking, very, very solid business, cash flow, earnings, operating margin increasing since it was listed, so that dates back to 2017. Macquarie and Citi have also upgraded it to a buy with 10% upside. If we look at the chart, this stock has been heavily beaten down, 25% down since the tail end of last month. It is now approaching the middle Donchian channel. It's made a gradual rebound, 12% before reaching the top Donchian and 26% before reaching all-time highs. So a lot of growth potential. If you look at the stochastic and MACD, both positive and diverging, indicating potential positive momentum moving forward.
Wow. There we go. You heard it here first. Ladies and gentlemen, thank you very much for tuning in this week. On behalf of everyone here at the show, I want to wish our clients, friends, and colleagues a safe and happy weekend, and we look forward to seeing you next week. My name is Will Brownlee, and this has been the KOSEC Show.